Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. Today is Saturday, February 15th, 2023, and this is Blockhead Traders Weekly. This week, we've had another audio snafu. We actually recorded this back the previous Wednesday, and when I went down to edit this video, we have noticed that all of my audio was missing. Therefore, this will be an interesting video where we will kind of cut and paste in my commentary overlaid with Viper, who joined us for the show. In the show, we talked about kind of our market opinions of what's going on in the market today. Viper also entered a 1% trade, which we covered that 1% trade, and it was a buying an option. So we made some commentary on some of the theta decay. So it'll be a little bit of a slice and dice episode here, but I think the content still will come through decent, and we'll try to do better the next time we record. But before we hop to the content, I want to give a shout out to our Discord, link in the description below. You can hop in there, say hello to myself, Viper, several of the other Blockhead traders. Love to hear from you. Love to hear what type of content you're interested in. This is also available at an audio-only format wherever you get your favorite podcasts. So look it up, and if you can't find it, let us know and we will get it there. Also, you can follow each and every one of my trades, the good, the bad, and the ugly, at thetagang.com/sprocket888. Now, hopping to this week's content, we actually opened up the discussion around general opinions on the market, where we thought the market was, where we thought the market was heading. And, I gave my commentary first. And in general, I am not really solidified one way or the other on the market. There's a lot of bullish sentiment out there. There's also a ton of bullish sentiment. And I think the market is really caught in this tug of war between the bulls and the bears right now. There is kind of conflicting data when it comes to the economy. Interest rates are still very high while they're coming down a little bit. There's a camp of people out there that think interest rates are going to get cut before the end of the year. As soon as that happens, they think the market will be off to the races. There's another camp of people saying, hey, there's a lot of economic indicators that says there's macroeconomic slowdowns on the horizon. And you really see this manifested in a lot of the push and pull of the indexes. So, Viper will give his commentary here in a minute from this show, really focusing on kind of the SPX or the S&P index. And I, too, have kind of been really interested in the indexes. And the type of trades that I've been really deploying on those indexes are these, I call them more delta neutral trades, where you're kind of going on the top side and the bottom side of a range. So they're range bound trades. And I tend to go with the premium selling of the range bound trades. Viper and some other traders tend to try to go directionally. So when you get to the bottom of the range, they'll kind of fire off their trades bullish. When you get to the kind of top of the range, they might fire off bearish trades. And I don't really see that kind of ending anytime in the near term. There's just so much kind of uncertainty out there. And it's kind of funny because when you approach market sentiment, right, you're always looking forward. The market is kind of always forward looking. And because the future is never really clear, it's almost always in some sort of state of turmoil, or not turmoil, but maybe confliction. So you got, one camp one way, one camp the other. And that really just creates interesting trading dynamics. And so that's kind of what I've been watching, and a lot of what I've been focusing on for a lot of my particular trades is kind of capitalizing on this, not really going to the moon, not really going to zero, just kind of treading water type of trades. And for me, that's premium selling, and that's where a lot of my trades have really been kind of coming in. And, we'll get to the 1% trades, and that's one of the handicaps that I guess I've been coming across as we approach the 1% trades is my trading style is not so into those smaller position size for the 1% trade, or basically the under $100 risk. But we'll touch on that when we get to the 1%. So anyway, let's turn it over to Viper and get his commentary on where he thinks the market is right now.
So I have a couple thoughts. Generally, I'm optimistic. And I mean, we talk a lot about trading strategies, and especially in the Discord, we talk about how you shouldn't for trading, this is, and again, so obviously this is not speaking to the investor mindset, but for trading, you should be able to make money in any direction, up, down, or sideways. So when I say I'm optimistic, that's just obviously talking to a long, bullish slant on the market or anything like that. Um, and so that's just because I think we're naturally biased to want to see up, and so I'm optimistic. There's not. I mean, I completely agree. There's not a particular sector that's like this is the thing, and I think that's evident to the transitional phase that we're in now. Again, all of this is intentionally our thoughts as we're learning this. Like this was the first massive bear market that we've ever experienced. We obviously started trading in a heck of a bull market. And so these are all first exposures. So that is to say, as we say, not professionals, not experienced, learning this live and with everybody else. But I feel like that's evident of the transitional market that we're in, that we have talked about the theory behind how the market leads reality, and with all of, and what we've said many times, as far as with interest rates coming down, a pivot coming at some point. We're certainly closer to pivot than we are towards quantitative tightening. Like that's kind of at very, very broad level. Wherever it happens, whatever, we're closer to that than we are to where we started. So the market seems to back that up, with the market is now trying to figure out, is it now? Is it not? And it's at this transitional point of maybe we should start to price in a return towards pivot and then quantitative easing. So I feel like everything you said is kind of evident of that. And real quick, I think you might enjoy this chart that I have here, because it speaks to your favorite channel theory. So this is a chart that I've had on the SPX for a while now, and I think it was somewhere back in early this year, January timeframe, when I really came up with all these levels and charted it out. I haven't touched it or changed it since then. So before we zoom in to present day, if we do a little of Sprocket's channel theory here, and I should have just grabbed the channel tool, but we're probably about like that. So, I mean, honestly, that is exactly what when you are looking at options of trading options in a channel or something like that. This is the moment where you probably don't want to touch the options, because we're in this transition period. We were clearly in a very clear downtrend channel. We kind of busted out of that. We came down and actually just recently tested the outside of the channel and kind of came off of that. And that, whether that's accurate or not, it at least adds up. It tells the story as far as why this feels so choppy and sideways. And just speaking more to the chop and sideways, I mean, look at this recent action here. This is the daily. And so we first messed around in this range going all the way back to July 2022. Granted, this was heavier volatility. Now traditional price action TA on this chart, this wasn't an important range. We were still price discovery of the lows. So I would say we really started messing around with this range again November of last year, when we put in a local low. We came back up, we regained this, and then we started to where we're at today. So the other reason I'm optimistic on the technicals of this are, to me, this range up here, 40, we'll call it 4050 to 4100 on the SPX, was a very critical range, going all the way back to this wick low here, February 2022. So this was a critical range that we need, and we still have not gained where we've gained it, but we still have not confirmed its support. So we are still in a lot of decision mode. But it is a major range to get back over. And so back in February this year, I was super excited to gain it, and then we lost it, but that's okay. We gained it. That was the important thing. Then the other important thing after you gain it in price action is that when you retrace from gaining it, you don't lose this previous low, which was down here at 37. We'll call it 37.80, which we did not. We came down, we tested it, we came back up, and now we are back at this level. So we're doing the right things, but we are at very crucial decision points, because right now we don't want it to stop here, where you can see we've come back to the 4,100. We don't want to lose it and put in a lower low here, because then we're in trouble to the downside if that happens. We want to keep going, and we want to get higher than previous. So the last thing I want to show real quick is just my favorite trick of inverting the chart, because right now that looks a lot like I can see it maybe. So with those levels turned off, if we invert the chart, now all of a sudden, because again, we're playing to that long bias, and the best way to remove that long bias is flip the chart, such that a long bias here with the chart flipped would obviously be down in price. But this chart, when we flip it, doesn't really look like it wants to go quote unquote long. We put in a local high here, and we keep consistently failing to put in a higher high. However, we are consolidating on the lows. We're not putting in lower lows, quote unquote. So that's, it's a giant consolidation period. We're doing lower highs, but we haven't hit lower lows yet. And so, to me, that adds up to, I guess, like I said, optimism.
So we're going to move into the 1% trade this week. And Viper's going to go through one of his 1% trades that he's put on Apple, where he has bought some calls of Apple and bought some puts in Apple. And it's really turning into the Viper 1% trade show as we move forward, because there's two things kind of holding me back from 1% trades. One, just things outside of trading have taken up a lot of my time and attention of recently. And so I haven't had the opportunity or the time to really dig in and try to find the 1% trades. The second part of that is the 1% trades are actually kind of hard to find. So I've been starting to look for 1% trades, and I'll end up finding a trade that I like to take. And you'll see those on my thetagang.com/sprocket 888. But they don't really fit that limitation that I put on the 1% trades to try to make them tangible to you guys, the viewers. So I wanted to make trading more approachable, and I put the artificial cap of $100 risk size on my trades that I'm going to take. And I'm really finding that my trading style, the one that I gravitate to mostly, is the premium selling. You're really limited in trying to find trades that are of that size. So when you are selling options, you got two ways to go. You can do defined risk, which is the only way to really get into the 1% range of $100. And you're either buying options outright, which is the type of trading that Viper's been engaging in lately. That's not the style I like. I like to sell premium. And so when you're selling options, in order to define your risk, you have to kind of do a vertical where you're buying one and selling another. And the distance between those two strikes, or it's also known as the width of that vertical, you have to keep it to $1. Anything more than $1 and you're over $100. So in the world of options, each option is 100 shares. So a $1 wide option contract represents $100 in downside risk or maximum loss. And it's just really hard to find a lot of underlyings that have $1 strikes. So when you look at an option chain, what I'm looking for is where are the values of the strikes? And for the most part, it's pretty typical to see $5 steps. So, you'll get $70, 75, 80, 85, 90. Those are where all the strikes are. And in order to play that with a vertical, the smallest vertical you can make is the distance between two strikes, which is $5 or $500 of risk. Now, there are other options that have, dollar strikes where you're going, 1, 2, 3, 10, 12, 13 strikes. There are some that go by $2.50 increments, but there's not that many of them. And when you start to overlay the criteria that I trade on, it's, you really have to be kind of hard. You're looking at very small dollar stocks. And there's just not a lot out there for me to find. So I've been trading, and you can find those trades on thetagang.com/sprocket888. But I haven't really been able to engage in a lot of the 1% trades because they just don't fit my style. Viper, on the other hand, he has really been experimenting a lot in what I call my anti-trading style. So while I sell options, Viper has really been buying a lot of options in his 1% trades. And, we'll kind of touch a little bit on, how is that risky? Is that not risky? And it really depends on what you classify as risk. So for me, the way I interpret risk is how much can I lose? And so how much of my initial investment can I lose? And when you buy options, you can lose 100% of what you put in. Now, you can't lose any more than 100% of what you put in, but you can lose everything. And I also go by probability. And, depending on how you trade them, if you trade them as a synthetic way to use leveraged shares, which is typically what Viper is doing, he's trading the option or buying the option to get extra leverage on the shares, which is what most people do when they buy options. As long as you keep them for a short period of time and you're aware of some of the counteracting Greeks that are going to kind of attack your position, it can be viable. It can be there. It's not my style. I don't really care for it that much. And so I opt for the premium selling. But, let's hear Viper's latest 1% trade and his real anti-sprocket trade.
Yeah, anti, but then also, like we talked about on the last episode, like we're still kind of doing the same thing in inverse relation. But yeah, so let's jump over to my chart and kind of go through where this came from, because this also does play into what we talked about last week as far as our screening techniques. And we talked about the social aspect of our screening techniques. And this part of the reason I only bought one was to try to fit into the $100 range. Obviously, I blew it a little bit there by $58. And the other reason I only took one was because this was a fairly, I don't know, I did my due diligence on the technicals of it, but I still feel like I rushed into the play a little bit. But nonetheless, it came about because obviously I wasn't actively, aggressively looking for a play, but just always had my feelers out. Like we said, the social aspects, whether it's TV on in the background or Twitter or whatever. In this particular case, it happened to pop up on my Twitter feed, and just kind of scrolling there that there is an account that likes to call out large moves by corporate insiders or Washington insiders or anything like that. And it was an alert that Tim Cook, the CEO of Apple, had sold, I'm going to botch it, I don't remember exactly how much, but he sold a very significant amount of shares of Apple. And it was especially notable because he notoriously doesn't sell his shares. So I was like, you know what? Let me give it a look. And so I went and looked at the chart. And at the time, the chart was looking like this. So ignore all of this spike and drop here. We were coming off of this big local high here and zooming it out a little bit. Like this was a big run up. And so we were coming off of this. We were crashing down pretty hard. Somewhere in there was when Tim Cook sold his shares. And I was like, you know what? Obviously, the news that he sold his shares was what surfaced it on my radar. But that's not a reason to jump into a play. But I did like the retrace that was happening. And I charted out a potential reversal to come all the way back here and test this 157 or 157 range to maybe 155, somewhere in there is where I'm targeting the potential retrace to come down and confirm support, because we went and put in a local high from 156 here, and we haven't come back and tested to confirm support after doing that. So that is the move that I suspect we are in currently. So I liked all that. Let me flip my chart back on here of the play and zoom in a little bit. That was the thinking, and I still like it. It's doing what I wanted it to do. Again, I'm all the way down here at the 150 strike. There's going to be some post-mortem debates internally to me as to if 150 was the right strike, or if I thought it was going to come down to 156, 155. Why not just sell that? Buy that. But at least for now, I can tell you why I did not buy the 155. And that is the other part of the play here where I rushed in. There were emotions at play, which I, need to work on, because we were mid retrace here when I jumped in. And that's knife catching. That's not a good time to jump in. But those emotions hit of like, I don't want to miss this. The proper play, price action thing to do was wait for the confirmation that we are in fact retracing. And so that would obviously have been somewhere around right here. When you retrace, you lose what's important, which was this over here. We lost that. We came down to test. And so even when I got in, the reason I say it's knife catching is because nothing was confirmed. We actually were coming down, and if you look, it's a little easier to see in hindsight now, but I definitely should have seen it. The previous local high was right here. And let me change that color just to stand out a little bit. We'll make it orange. That was the move that was happening on this retrace, which that very well could have been a retrace to confirm support here and then gone and put in another local high. So I do not approve of my entry strategy here. It was rushed, and I didn't wait for the proper technical confirmation, which would have been to get the support there and then show the weakening here and enter somewhere up here. However, hindsight is a real bear, because I very well could have missed this gap here because it happened very fast. There was a little confirmation. I'm not going to do it here, but maybe if you zoom in on the time frames, you might get confirmation that this was a lower high, but this was just rounding and then it gapped down. So, that's where hindsight starts to mess up with your thinking, and you don't want to get too deep into it. I definitely entered this too soon, and I should have waited for at least a little bit of a bounce before I got in. However, it's working out okay so far. This gap was a huge volatility expansion event. I've basically lost all of that volatility expansion, and it is now contracted on me. However, the price move from where I entered is what's keeping my head above water here. And I'm really, at this point, I think I'm banking on price to keep me in profit. And I'm no longer banking on volatility expansion to keep me in profit. So based on that, if I get some price movement more in my direction, I'm probably looking at maybe a 20-25% profit, and I'm going to get out most likely, unless there's some big volatile event and I can capture more of that. But I don't like not getting the volatility expansion, or the fact that the volatility expansion event could have already happened And I want to be cognizant of that and pay attention, because as we talk about with this buying option strategy, these are the things you got to pay attention to and understand in the mechanics and the underlying mechanics of how these things are priced.
Now, after that recap of the Viper's trade on Apple, where he's really kind of, he even touched on how a lot of that premium kind of decays away. He's looking for volatility expansion. I kind of called his attention to a factor that he should kind of consider or watch or kind of learn from. And so I often talk about how there are Greeks that are working against you when you buy options. Most notably, the Greek that is working against you 100% of the time is theta, and that's time premium or time decay. And I kind of talked in the recording that we don't have for this show about how you can kind of quantify that and put it into perspective so you kind of understand it. And so I believe in the example here of Apple, I had Viper pull up the premium or the theta value of his position. And the theta of that call was 0.08 or 8 cents theta at the time here to expiration. And what that really means is that is $8 of theta decay. So the following day, after, if the next trading day passes and Apple doesn't move anywhere and volatility doesn't change, it just did nothing, stayed exactly where it was, his option there would be worth $8 less. So if he is up currently for $4 on his option contract, if one day goes by and he does absolutely nothing, his option play will be negative $6. And that will change over time relative to the value of the option. And what that means is if your option is worth, let's say, $1, maybe the daily theta decay starts out at, 5% of the option value every day. And as you get closer to expiration, that percentage of the option value will increase. So, when you're 45 days away, maybe you're decaying 2% of your value every day to theta. When you are within, 2 or 3 days, maybe your theta decay is more like 70% of the option value. And it really ramps up in that 30 to 45 days to expiration window. So when you're trading those synthetic long shares, so go really far out in expiration, you can minimize that theta impact every day. And one thing to keep in mind is if you are only trading for a very short time, you can kind of gauge how much directional price movement you need to counteract that constant theta force. And that's kind of what I pulled up to Viper. I said, well, Viper, how much did Apple move today? Because it was a huge move day in Apple where Apple dropped a ton. And for Viper, that's good because he bought the put. So he was betting Apple is going to go down. And when the price is moving, you're impacting the delta of the option or the price direction movement. And so in many cases, when you have high delta movement, you will completely negate theta. And that's what I called out in the show, where he said, well, Apple went down $1.50 today. And so if you put that in terms of the option contract, his option contract increased by that price movement of $1.50. Not exactly 100%, but a percentage of it just due to the way the formula works. Either way, that is a price movement of $150 on Apple. And, balance that against the $8 in theta decay, and you can see, wow, that price movement completely drowned out the theta and made it a moot point. And that's kind of what I'm talking about. So when you are looking for the large directional moves in an option, as long as you're aware that the shot clock is running against you and you understand how to read the shot clock, see what's left, and understand how much impact that shot clock is having to your overall profitability, you can manage that risk. You can manage that value. A lot of people that buy options, I don't think really understand that aspect of them. And they might get lucky that their price movement, kind of negates that, but they don't understand that it's there. And if you don't get your price movement and you go in the other direction, you will, the option value will drop because you're moving away from your strike. Two, your option value will drop because theta is decaying away. And it's kind of hard to grasp that concept. And so I kind of called out this metric and said, hey, Viper, really pay attention to this, not because I want to scare you away from it, but because it's part of the mechanics of what's happening under the hood. How does this machine work? And the more that you understand the why something does what it does, the better you're going to be to manage that machine and to be able to control it to some degree. And so I think that's a very important call out. And it was an interesting thing to kind of contextualize. Hey, look at theta. When you see 8 cents in theta, that means every day you're going to be decaying $8 in value of your total option contract.
Yeah, that makes sense. And that was one area, that as much as I just mentioned, IV essentially, with the volatility and price movement and the Greeks and the Delta, theta was one thing that that explanation makes a lot of sense. And I hadn't, up until now, I knew theta decay was something that was working against me. However, how to factor it in, especially because, like you said, it doesn't always quote unquote go up. It does, like you said, it relative to the price of the contract, it does, but I hadn't been paying attention to that piece of it. I had just been like, oh, cool. Like my theta went down, and so maybe I'm all right. So that makes a lot of sense. And, the only thing I accounted for in that theta with this particular trade was, instead of going like 2 weeks out, which was the AMC one that I did before, this time I went 4 weeks out. But obviously, that's still within a potentially dangerous range of theta decay if I don't get the price move or volatility expansion quick enough, which kind of brings me back to jumping in too soon, or maybe not jumping in too soon, but almost a different version of knife catching, I guess, like trying to put too much pressure on getting the move I want to see. And so needing to push that expiration out further to further mute that theta impact, which is obviously part of also why I'm, having the risk mitigation position sizing that I am, because I know these are things that I need to work out, and obviously working out in real time. And I want to work them out before I do something more sizable. So, yeah, I will definitely. That does give me some ideas of how to track that a little bit better. Maybe spreadsheeting some of these trades, but obviously I'll let those thoughts simmer a little bit.
And that brings us to the end of this week's episode. Again, apologize for the audio snafu and kind of the hodgepodge cut and paste of the different commentary. I know it probably didn't flow as well as our shows normally do. We'll try to be more careful as we record in the future. It just kind of stinks when this happens, but there was a lot of good content that we did cover, and it was largely kind of Viper going through a lot of his trades. So it was great that his audio kind of came through and we didn't have any issues there. So hope you kind of learned something from those 1% trades. We have earnings seasons really kicking off. So by the time this episode comes out, the banks will have already reported. Actually, they reported yesterday, kicked it off, and they surprised everyone as far as how profitable they were and how that panned out. But that was just kind of the first shot over the bow. There is going to be a barrage of companies reporting in the coming weeks. I'm very hopeful that will kind of bubble up some fun 1% trades. As you know, one of the coin flip trades that I love to take is kind of an earnings trade where you get this 50-50 shot of an earnings announcement on whether or not it's going to pop, drop, stay where it is. You get this kind of instant gratification of you put your bet on just before the market closes, and you come to the realization of what happens by the time the market opens the next day. Not very high probability of success over time. It's pretty much been exactly a coin flip 50-50 for me. But it is pretty fun and exciting. And there's likely to be some interesting volatility plays within the financial sector because volatility is very elevated there. And, I'll kind of screen through there. We'll see how a lot of this stuff plays out. Upcoming Fed meetings, and will they raise interest rates? Are they going to pause interest rates? So just a lot of things to pay attention for. Hope you guys are doing great out there and having fun trading, and wish you the best of luck. Remember, think outside the block.